What's up, man? I want to talk about have a look at the price action, see where we are. We're expecting CPI this week, post NFP week, second week of Feb. So let's start off with a calendar here. Yesterday was high resistance liquidity run conditions in the market. We didn't get see much, and today we have Fed chair testifying at 10 a.m. And honestly, I don't expect much. I didn't think we're going to get much of a different playground than what we had yesterday. I think we're going to see the same thing here. Them accumulating orders for CPI release on Wednesday morning at 8:30. And I personally believe since we are getting all of this high resistance liquidity around conditions consolidation on the daily, I think that CPI is going to be used as a Judas swing to knock everybody off. And one of two scenarios that is Fetcher at 10 a.m. is either Fetcher, you're going to find an entry to a setup at the AM silver bullet, or 9:30 is going to give you that entry, and 10 a.m. is going to be used to target the liquidity that's in place, and price is going to reach for that liquidity at 10 a.m. So that's what I'm thinking going into this. And Thursday we have PPI 8:30, and Friday we have core retail sales. The other scenario we could see here is that CPI is just going to be a chop shop day, and people are going to be knocked out both sides, and it's going to clean up Thursday morning. And Thursday is just going to be better price action, as well as Friday. Let's go ahead and dive in. Let's start off with the dollar index. And this one I'll be analyzing along with you. Before we dive into that, seasonal tendencies. Let's talk about seasonal tendencies real quick. Seasonal tendencies, DXY, month of Feb. We expect a rally early in the month, which, let's see here. Last week, didn't really get a rally, mostly tanked. And we've been trading, tanked and traded back up higher. So it didn't really move anywhere. We're still inside of a consolidation here if you look at this. So we would go into this expecting a rally and pull back down, sit sideways for the most part. Now your 35-year and your 15-year plotted lines indicate a rally higher at the beginning of Feb, and then a chop shop basically until the end of Feb, and then a push higher at the start of March. The 5-year plot indicates a run higher and a sideways move, and towards the end of the month, we start going into a rally higher on dollar index. So far, we are seeing this sideways, this choppy expected price action. I wouldn't consider us seeing a dollar that's going to rally if we don't take out any market structure here, especially on higher time frame. As far as NQ, we expect this chop shop price action since December, Jan, coming into Feb, second week. We should start seeing some bullish price action here. So that's what we expect. Of course, we have to wait until we see those signs in price action to confirm that for us, and then we can trade accordingly. So there's that. Seasonal tendencies. Let me get rid of all this, these old levels, and have a look at this price action here. The fair value gap, weekly gap. Yeah, we traded that back there. Daily wick failed to reach consequent encroachment of that wick, indicating bearishness last week. Took out that daily old high. Now this wick here would be something that I would have denoted. We'll do that in a sec. I just want to take a look at the higher time frame levels here and see what we have to work with. If this wick down here, that wick is going to be something I'm going to be looking at. We're just cycling through, looking at the higher time frames, weekly, monthly. Look at that. Didn't do much for Jan. Chopped around. So far, Feb has been sitting inside of this candlestick right there. So really bad price action so far. Nothing one-sided. Let's go ahead and note these levels. Weekly wick. That'll be a 75%. 75% of the wick. And I'll just go ahead and make them red. I'm happy with red. Weekly wick. Consequent encroachment. Consequent encroachment. And I don't need more than that. Go up here. This is a weekly wick as well. So I'm just going to note it down as a weekly wick. Weekly levels. And grab this. And we got a 25% of that wick up there. And get rid of this. These lower levels. So that's what I'm looking at as so far on highly time frames. Look at on a daily. So Tuesday of last week, we traded into this 25%, unable to get to consequent encroachment of this. And take note that we also had a body closure below that 25%, indicating a bearish weakness in price. So that's something that I'm noting, something I'm looking at here. Daily fair value gap. We had this daily fair value gap down here. We'll keep that on the chart, and I'll change the color of this. Say green. We did trade into that. Tap into it again. Keep it on the chart. Daily fair value gap there. Not gonna worry too much about getting rid of that gap. My focus is sitting on these wicks. That wick and this wick down here. Got a gap here in price. Take a look at this gap here. We also have Monday of last week. Traded down, closed down lower, and we opened up higher. So like a new week opening gap in a sense. And note that we traded into that and we're traded a little bit higher. So we took out yesterday's high here. So yesterday's high was taken out here. So that's something you want to note, that yesterday's high was taken out. I'll pull this over if we trade up there. So this is salient to me, this gap. Look at a weekly C. I would like to see price for now. My draw would be if we can tap trade down lower into this 75% consequent encroachment of it, if it wants to reach deeper. If it really wants to go, then we're looking at these old lows here. These old lows would become targets. Also have this order block here. Could note the open of this. Look at how the body's right here. Respected that level. Tapped it one last time last week and put it up higher. Still something you could note the open of that, pull it through, and if you look at, it's almost in line with this daily fair value gap high. So if I took quadrants and I pulled a quadrant on this fair value gap and I looked at where the open of this week weekly order block was, then that strikes the 75% quadrant of that daily fair value gap. So those are two levels that coincide. So that would be a level that would be quite salient. A nice level if price would trade down into that. So those are things I'm looking at, things I'm keeping in the back of my mind, things that you should be writing down. So the focus is down here. We're looking for lower prices ideally. Again, we have to wait for price to give us these signatures and show us that it's willing to rally down lower. Getting into lower time frames. Not much was done yesterday. It's just job shop. I can see no movement here. Again, this gap, new week opening gap, call it. We took out that old high. Look at that. Yesterday we tapped into when we didn't tap into that, but when let's see here, Friday, Sunday, we opened up and we traded up higher, basically filling this portion of that gap, filling that in, completely, rallied down, closing this little range, then targeting the high. We took the high, yeah, getting real close, and look how we didn't go back into the bottom, the low of this new week opening gap. We didn't go back into this price. One more time, and it tanks. I go ahead and extend these out into the morning. 7, yeah, go for 11. Pull these all out. I'm looking at that. I'm keeping this in mind. This fair value gap is not going to be something that I note since we have this new week opening gap. We tap into that. The only thing here that I would note would be that low. We have that 4-hour old low sitting there. So that's something that I would want to see price draw into, that old low. 1 hour. See, on a 1 hour, you can see that we took out that high right there. Monday morning. Let's just go ahead and look at that. Yeah, Sunday. Yeah, Sunday right there. Like how we traded up, took that out, that high. Traded back into what would be an order block. You can see we rallied close below that. Quite nice. Traded back into that order block, fair value gap. Beautiful move away from it, targeting these relative equal lows in here. Nice little relative equal low down there. Nice little low hanging fruit objective to see price get into this. That'll be a 1 hour old low. 1 hour equal low. 1 hour equal low. That's a nice level there to look at that. See if price wants to go down into this. And then we have that order block which we traded. 1 hour order block. And order blocks, I just make it green. 1 hour order block green. So we can look at that. We got a gap sitting up here. So moving closer into pre-market. If this was closer to pre-market, then I would look to see if price wants to trade back into this fair value gap. Maybe as high as the order block. If it can leave, like, trade into this gap and leave a portion of it open, leave the upper half of it open, then that would be a higher probability to see dollar push lower. So that's what I would be looking for. Those are things you look at. If it doesn't fill the whole thing in and the bodies stay below that mean threshold, the consequent encroachment of that, then higher probability just it's gonna tank. So those are things I look at, things I think about as I'm analyzing this. So on a 15-minute, there you can see we had that clear structure to push higher. Let's look here. Yesterday's price action. Yesterday was a slaughterhouse. Slaughterhouse. The afternoon was even worse. Slaughterhouse. So far for today, we opened up, took out this high, consecutive up close candles straight into that, took out this high, tanked, closed below the low. That 1 hour fair value gap is a nice level to look at, and then as well as that 1 hour order block, which I said that's something else that I would allow price to trade up into that, but ideally I wouldn't want to see it uh, go above the consequent encroachment of this 1 hour fair value gap and sort of leave like a breakaway gap there. 15 minutes. So that's what I see for dollar. I see prices pushing lower potentially. So that's what ideally what we would want to see here. Nice equal low. So bias is lower, and narrative, I got the narrative derived from a couple of things here, including the fact that we traded into this gap, the new week opening gap, I guess call it. We moved lower away from that, as well as that wick, the upper quadrant of that wick, as well as the fact that on a daily we have that order block, which also lines up with this daily fair value gap, which noted down here, 75% quadrant of that. Another nice level, a really nice level. A lot of things coming together at that level. Nice fair value gap sitting here as well. Could also use this gap here, extend that out, and see if we trade below that. Use it as a filter. If we trade below that, which would indicate then bullish and bearish uh, sign, stays above it, it's bullish. Goes below it, it's bearish. But the fact that we traded into this and we filled it into the T, I would elect to just not use this since we already traded into that. If it price left this open and we didn't trade into that, then that would like be a like a red sign, red flag, like that would be a draw on liquidity for I would want to see price trade down into that. So since we traded that, that's not something that I'm going to look at here. But I'm looking at these equal lows now as a low hanging fruit target. And then this low. So narrative got derived from, like I said, weekly wick. 75% the fact that we traded into this gap and moved away from it. And as well as that daily order block that is lining up with this daily fair value gap, 75% level. And the fact that we have relative equal lows on a lower time frame. 1 hour equal lows. So that's what I'm looking at. Just a glance at lower time frames. Don't analyze. I don't analyze this on a lower time frame. So look at that. Beautiful, isn't that? Not beautiful. Equal highs taken out. Retail thinks they are safe above here. I guess not. I guess you guys had your double top, price rallied, and guess they came back for you. Got you there, got you up there too. So that's dollar index. Let me shift over to NQ. Looking at NQ. Look at it daily. As far as NQ, I want to see higher prices. Ideally higher prices. We have this daily gap. Guess you could say last week's new week opening gap. Sitting here. So that's the level that I'm noting. We traded down into that yesterday. And then we had another new week opening gap. This candle's close and this candle's open price. And there's your new week opening gap. We have another new week opening gap here, which I noted that price is sitting inside of this. But we now have an equal high here. So this equal high, coupled with the fact that we traded into this new week opening gap, we had a massive rally higher. Valid order block sitting right there. The valid order block, this one's valid as well. Yes, it is. So that's the level you could extend the open, the mean threshold. Sensitivity should be expected at those levels. But this daily equal high is way too clean. Didn't I just show you what happens with double tops? Yeah. That's all I'll say. So daily equal high, to me, that is an obvious draw. And then we also have relative equal highs here. Equal highs. Well, I'm just going to change this over to daily relative equal high. They are quite relative. Got another high sitting there. And then we had the daily let me see here. Daily con changes. Oh yeah, the daily contract changes gap. Which if I turn off contract adjustment, then we have this gap here. Now, ICT said that he switches between adjustment changes for contracts and settlement prices, and whichever gap is the bigger gap is the one that he is going to elect to use on the chart. And if you don't change between toggling these and looking at price, looking for gaps, then you are going to miss things like this gap. Because if I toggle contract changes on, then it's not, there's not a noticeable gap there. Okay. So with the contract, with this turned off, we have a noticeable clear gap in price. I expect price to draw higher, take out this daily equal high. I mean that it's way too clean. So that's what I'm looking at there. We had this nice reaction here, pumping this thing higher. So I'm looking at that. That's like the draw on liquidity for me, at least so far. I do want to take a look at the weekly. Look at that on the weekly. We had consecutive down close. If I take both of them, then I gotta pull a fib on here. It's gonna, yeah. See, we traded that lower quadrant of that. Look at that candle's body. Traded away from this. And if I only look at the one, mm, not as clean, not as clean as taking both. So I would elect to just use both of them and look at that lower quadrant. Really traded into that really nice. Ideally, it would have been perfect if it traded the mean threshold, which is 50% and rallied. But it still respected that lower quadrant. Looking at a monthly, not much in December, not too much in Jan. Feb, still inside of the range of Jan. I'm just looking at these things toggling through. Again, just looking at adjusted contract adjustment prices. Oh, we traded down there and we opened way down there. Traded higher. Same thing. I'm not going to note that though, because that will be a mess on the charts if that's noted. So I'm not going to note that. For a daily, that daily reclaimed inversion, because we traded above it, back into it more than once now. So that's like a reclaimed inversion. I guess you could say that. And we got this daily gap noted, new week opening gap noted. Okay. Seems like I did talk about everything on a daily. So let's dive into a lower time frame. Noting this, look at this gap here we had down here. Massive. For this week, here's your gap. Closed down there, opened back down there. Traded higher into this. Completely fill that in. Order block. We got two here. This one has a body that's a bit higher than that. Could look at both of those. Look at the mean thresholds. I like the mean threshold right there. See how we traded this mean threshold? So that is what I would note. Note the fact, let's just blow this up a bit. The fact that we traded right into that mean threshold, that it would be a 4 hour order block mean threshold. So I like the way that we traded into this. Candle bodies, look at that, respect beautifully. And we had that daily, this is the daily equal high. There's your daily equal high right there. And see that previous new week opening gap. See how price sat above that, traded around the consequent encroachment there, traded higher, below it again. We're at the low now. So that's the level that I'm keeping in mind there. We do want to see higher prices. Look at this beautiful equal high sitting right here. And if we go out more, we have this high there and a bit of this gap that's still left open here. So that is what we are looking for, higher prices. So we do have this gap down here. We also have this one. For now, I'll note this one. Because I got so many rectangles on here, I'm just going to use a line. Daily, no, this is not a daily. This is a 4 hour fair value gap. Fair value gap. And I'll note it as such. Pull it through for now. Pull it through.